All right. We are back with another episode of the Real Estate Investing Club. Man, you guys have no idea the last 10 minutes. I have just been battling technology, trying to figure out this new streaming platform, Riverside, which, I really like it. People suggested it to me, so no complaints there. But Jesus, I could not figure it out for the life of me. But we made it. We're here, and Cynthia is here with us. Our guest today is Cynthia Myers. Cynthia is from Real Life Planning. She is a certified financial planner and an investor doing single family and small multifamily. Cynthia, thank you for your patience and thanks for hopping on the show with me.
Well, I'm sorry I couldn't provide more tech support, but I'm very pleased to be here this morning. Thank you.
All right. I forgot to tell you before we get on the show, we always start with stories. So why don't we go back to the beginning of your story in real estate and just tell us how you got here?
Oh, sure. Well, my husband and I are both first generation real estate investors. And early on when we got married, this is before like FIRE was really a thing, but we thought, well, we're going to live on one income and invest the rest in things that grow. And for most of our early married life, we were investing in securities, which of course we still do. But during the Great Recession, I just had my youngest child, and the stock market was in the toilet. And we said to each other, we have got to diversify. We've got to diversify. And so we started to learn as much as we could about investing in rental properties. I'd seen many of my clients do that and do well in that. And so we started, we bought us one single family home. It didn't rent for 11 months after we first bought it. And we were,
rough.
we had budgeted a certain amount of money to get in. And, we were a little nervous. Had we made the right decision? But we kept buying we kept buying individual properties, during that period of time, which is a great time to buy properties.
Yeah.
And that's how we got started, right?
Nice.
So it was stock market pain.
Yeah, that's understandable. I actually had just graduated college when in 2008, and so my pain there was I couldn't find a job in most of my hands. So yeah, that was a tough time, but it was great for real estate investing, or at least after that period was great for real estate investing because prices went down. It sounds like you were able to take advantage of that. Once you got those first couple of properties, how did you? I know you guys are into small multi now, but tell us kind of how your career has progressed since then.
Sure. So we originally started with single family homes. We had narrowed to 4 markets during the Great Recession, and we landed on the Metro Detroit market. So in the nice suburbs around Detroit.
That is not something a lot of people want to invest in. That's
so
great.
Not much in Detroit proper, but in the nice suburbs around Detroit, around where General Motors is. And we really thought at the time that we did not think that the auto industry was going to be allowed to go under. And that turned out to be the correct bet at the time.
Makes sense.
And a lot of faith just in general in the industrial Midwest and the Great Lakes region, from an investing point of view. And we invest out of state with a property manager. So, our property manager has been a great partner in our real estate investing business since the beginning. And, we're both, my husband, Steve, and I were still, working full time at the time and for other people. And so we just reinvested all the cash. Like whenever we were big savers and whenever we had enough, we would just buy another one. And then eventually we moved to small multifamily, right, to the little duplex or triplex kind of property. And during COVID, several of our single family homes had really highly appreciated in value. And so we did some strategic 1031 exchanges for more doors and higher cash flow. And so, we exchanged one to a duplex and we exchanged one to a small apartment complex, for example.
Nice. Yeah, I mean, I like your guys' story because, most people that come on here, they've real estate investing is their main focus and their only focus. But there are so many people out there who kind of take your story where they continue to work their job and real estate investing is their side business. But it gets to the point where you don't necessarily have to work. And you guys, sounds like you've got there. You've got to the point where you've continually invested. You've been able to reinvest your equity that you've built into your properties. And now you guys are into the multifamily sector where I'm sure the cash flows to the point where you don't necessarily have to work, but you choose to work obviously if you want to.
Yeah. My husband, we had a number that we were trying to hit in terms of monthly cash flow. And when we hit that number, my husband continued to work for a little bit while longer in his profession. He worked in reinsurance. And then said, he was ready to be work optional. He manages the finances of the real estate business, and it's mostly the real estate cash flow that pays the bills. And then, I went off and started my financial planning business, and so obviously that helps a little bit there. But it's the real estate that got us there. Yeah,
that's good. So you guys chose not to invest in your backyard. Not everybody, most people want to invest where they live, which is a good strategy. But if you live in a market, like where I live, Seattle, it's really difficult to find properties that cash flow. I think you said you're in New Jersey, which definitely...
So we're in New Jersey, but actually when we first started thinking about this, we were living overseas. So we were living in Bermuda, and so
Bermuda, wow, okay,
in Bermuda, yeah. And so we at the time you couldn't buy in Bermuda, but we didn't expect to be there forever. We thought we'd be expatting for a while longer, and we had sold our house in California when we moved to Bermuda, and so we really were. I mean, wherever we were going to go was going to be
choosing somewhere in the United States. It didn't matter.
Choosing somewhere in the United States, we thought was a good market. We also, at the time, looked at. We can be numbers oriented people. So my husband and I built a lot of spreadsheets, and we looked at the Detroit metro area. We looked at San Diego, which, was very attractive, but we didn't move fast enough. And we looked at Atlanta and Las Vegas, and actually all of those turned out to, for whoever was there, turned out
those
to be
were
good
all
places.
Good choices back in the day. So that makes a lot of sense. And but why did you end up settling on Detroit? I feel like had I looked at all those metros you mentioned back in 2007 or 17 even, I probably wouldn't have chosen Detroit and its submarkets. Why did you kind of hone in on that market?
Yeah. Well, and so what we were originally looking for, which is very difficult to find in today's national market, right? There are very few regions of the country where this is true now. But at the time, we were looking for where was the rent and homeownership relationship upside down, meaning that it was cheaper to buy a house than it was to rent the same house.
Interesting. Okay.
And now, rates were low, certainly not as low as they went during the early 20s, right? But so the ratios were very compelling, and
sorry to jump in, but why did you want that ratio? Usually, you want it to be cheaper or to be cheaper to rent than buy, because that kind of gets people to rent houses, and so you have a lot of demand in what you're buying. But you wanted the opposite.
Yeah. But I mean, if you think of it from a return on equity point of view, right?
Okay.
This was a period of time where you could, an investor could buy the 1% property, if you will, meaning that 1% of the purchase price and monthly rent. But you could buy the asset and immediately rent it out at a profit, right? Given where rates were at the time and some normal assumptions about vacancies and maintenance and that sort of thing.
Nice.
And we also thought that, we bought quite a lot around the General Motors area. And we really, there's some beautiful towns around there. And we really thought that the auto industry was not going to go out of business, right? And that was a very difficult time for Michigan during that period. But we, it's kind of like you try and buy when, as a general investing principle, like you try and buy when everybody else is leaving.
Yeah. You zig when everybody's zagging. That is a good strategy to have.
Yeah.
So looking back on your career, on your trajectory, what were some of the mistakes you made? What were some of the things that you, looking back, 2020,
Yeah.
you're like, you know what? This is something I know now that
Yeah.
had I know then, I wouldn't have made that decision.
Yeah. Oh gosh. I mean, there's so many. And
Those are
of
the
course,
things that get the best lessons, though.
yeah, I know. We're very lucky that everything has worked out. I can think of a couple in but no particular order of importance. So the first one is one of the first properties that we bought was around the corner from a cemetery. And it was
Mm.
it was a beautiful house. It was 3 bedrooms and 2 bathrooms and a nice fenced-in yard and a good school district. And for some reason, the property manager would have these open houses and people would come and then they just wouldn't take the property. Right. And so we had long periods of vacancy in that property, even though it was a gorgeous house. Now, luckily, we were eventually able to, to sell it and to take some appreciation in the property. But, that was one of the earlier ones that we bought.
Interesting. So you would not buy near a cemetery in the future.
Well, I guess.
Makes sense
maybe
to me. I wouldn't want to live next to a cemetery.
Yeah,
so.
yeah. And I mean, it didn't bother either one of us at the time, but apparently it bothers a lot of people. So that's something to think about.
Fair enough.
Conversely, we've had some success. For example, one duplex that we owned is near a hospital, and that has just been full all the time with zero vacancy, right? And
hospitals,
we get like
universities,
medical residents, and they come in, they recommend it to our friends. Like it's almost never vacant.
Yeah, that makes sense.
The other thing I think, looking back at that time period, is that I wish we both wish we would have.
Oh, looks like we're having a little bit of a technical issue here. Cynthia is coming back on. Give it a second. Cynthia, are you there? Oh, and we lost her. All right. We're going to have to stop this and come back later. I forget where we left off, but what I wanted to go into was your financial planning business. You focus specifically on investors with your financial planning. So why don't you tell us a little bit? I mean, that's a very niche subject in financial planning, but it's perfect for this podcast. So why don't you tell us, when you meet with people who do investing, who that is their main source of income, what are the things that you see that they could be doing better when they're planning long term?
Yeah, that's a great question, Gabe. So in our practice, we're financial planners for real estate investors. I'm a certified financial planner, and I guess you could say it's a combination of a traditional financial planning and real estate business coaching focused on the financial aspect of things. And I would say that some of the biggest, we were talking about what mistakes I'd made initially as an investor. Some of the mistakes that I see people make, one is that they don't get professional tax advice. Now, I'm not a CPA myself, but I think so many of the benefits of real estate in terms of the tax optimization benefits of real estate require pre-planning. And if you think about some of the strategies around tax minimization, for example, if you have a couple and one spouse has a high income job or business and the other spouse works professionally managing their rentals or their short-term rentals, all of that requires some pre-planning and some knowledge about what to do and what to track in advance. The other thing is getting ready for a 1031 exchange. You'd be surprised how many people call after they've sold a property and want to know what they can do to reduce or minimize their taxes. And so just not incorporating the tax advisor who understands something about real estate into their whole business process, I think is probably the biggest mistake that I see.
Yeah, and getting when I first started, I tried to learn all that myself, and man, you don't want to even try. It's just taxes are no fun, and it's a lot better to have somebody in your corner who knows that stuff and can help you save those taxes. And there's so many different benefits. I don't want to try to spout them out because I don't know them as well as I should, but that's why I have a tax professional to help me. So definitely good advice. I'm going to move us on to the quick question round. Are you ready?
Yes, absolutely.
All right. Starts with education. It could be any form. It could be a book you've read, movie you've seen, conference you've gone to, mentorship program you've been a part of. But I need 2 recommendations, one for general life wisdom and then one for real estate.
Sure. Well, I would say for general life wisdom, something that I've read in the past year by Dan Martell called Buy Back Your Time,
Yep.
just about when to delegate and what to delegate. I think it's a really interesting rubric for how to think about it as
Mm.
somebody that's running a business. And if you own rental properties, even though you may be taxed on your income tax return like it's passive income, we all know that it bears more resemblance to a business, running a business, than anything else. So
Yeah.
that's been a game changer, I think, for me. And my favorite real estate book is a relatively recent publication, and it's by Dave Meyer, and it's called Start with Strategy. We are not related, even though we have the same last name. And I think it's a really clear and open overview for people who are just getting started, right? It has kind of a data point of view, which I like.
Nice.
Being a numbers
Uh,
geek.
yeah, Dan Martell. I've watched him on YouTube. I like his stuff.
Mhm.
He's got some good stuff.
Yeah.
All right, next question is for your younger self. Let's go back to the Cynthia who had no idea about real estate. Go back to her, look her in the eye, give her one piece of advice moving forward.
Right. And this isn't dating advice, right?
No, just
So if
regarding
I could go back and give
business and real estate.
my 20-something self one piece of advice, this is super clear. It would be the house hack, right?
Oh,
That-
yeah.
Yeah. I mean, when I was 20-something, like I was kind of a late bloomer in terms of getting it together financially. And I was interested in buying the next, affording the next bigger apartment, right, with the better view or whatever. I was in Washington, D.C. at the time. It would be the house hack. It would be to buy a multifamily property and live in one unit and rent out the others, or to buy a home and to rent out to roommates. I think that is the most powerful thing you can do when you're just getting started, is to build your personal financial foundation with a home and your investment foundation with a part of it that's rented.
Yeah. Yeah, I did that, but it was later, and before that, I was renting, and I wish I did it sooner because house hacking. I mean, I'm definitely going to tell my daughter that is the way to go. I'll buy your first house, and if you just house hack it and pay the mortgage down, then it's good to go. So that is definitely good advice. I'm going to move us on to the next question. This is about the U.S. It's a big place. There's a lot of opportunity out there. You mentioned you liked Detroit back in the day. So today, currently, what is the metro you're most excited about investing in today?
Ooh. Oh, that's a great question, because I do hear from, different people who are buying in different parts of the country based on where their real estate business is. I think some general areas that I'm interested in, still many years of Tennessee.
Okay.
Right. So the kind of expanding Nashville area, I think Clarksville, Tennessee, for example, has been hearing some activity in Clarksville. I think also the Philadelphia metro area, I think it's very interesting that Philly, if you're familiar with the Northeast, they're from the Lehigh Valley, like Bethlehem and Allentown and Easton and kind of Philadelphia, like that whole corridor in between is filling up and is just becoming like another big gargantuan metro area. I think there's a lot of possibility in the Philly area too.
Interesting. You are, I don't know if anybody said Philly yet, but it makes sense. It's a big metro. And I've heard there's a lot of property crime out there, but it's got to be cheaper, which is difficult to find these days.
It is less. There's a lot of multifamily housing. And like anywhere in the Northeast or the industrial Midwest, for example, there is a lot of multifamily housing, which is great. But on the other hand, it's also older housing stock. And so, that's not for everybody.
Yeah.
Yeah.
All right. Next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Ooh. Well, my favorite way to generate new leads is in my existing market, right? With the team that we have in place. So the property manager, the mortgage broker, the insurance agent, the attorney, for example. There's still room to grow in the market that we're in. Luckily, it's still a pretty good cash flow market. But we've gotten some deals off market because, we want our property manager, for example, to bring us something. If she has another client that's selling a property, let us know.
Property managers that is definitely I think underutilized strategy is talking with property managers, because they are intimately involved with every single house out there. And so they know which ones that, the owners are getting tired of and are ready to sell. And so that's a good one. And it's not something many people mention. So that's good that you brought that up. All right, that leads us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Sure. So you can find me online at reallifeplanning.com or just my name, cynthiameyer.com. And reach out there, reach out on Bigger Pockets if you're a Bigger Pockets member, or LinkedIn, and make a connection.
Perfect. I love it. All right. Well, that wraps it up. Cynthia, thank you very much for hopping on the show.
Yeah, thank you, Gabe.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe with realestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.